What is good, guys? It's Rey-Jay back with another video, and in this one I'm going to be talking about the overall market and then break down some trading strategies that could work very well if you are starting off with a very small portfolio. Before I break anything down about all this information though, before I say anything about this and talk about some very important steps and procedures that you could take when it comes to trying to be successful in this game, I do have to mention a couple of things before starting. Firstly, I am not a financial planner, so take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire community as a whole. And finally, don't forget about the Moomoo link. If you put in $100, you're guaranteed up to 10 free stocks, and any could be a free Tesla or AMC share. Offer ends in 2 weeks. Check it out before they run out. With that out of the way, let's get on with the video. All right, guys, so when it comes to the markets, okay, one thing you have to remember is that it's very important that you have a plan before you do anything. On top of all this TA that we're doing, all these chart analyses and everything that we're trying to look at in the markets, you always have to have a plan before doing anything. If your goal is to either swing trade or day trade, you must be very disciplined. It is required to be disciplined to be consistently profitable. Because if you gamble too much and you don't manage risks, you're on the verge of risking a portfolio and blowing it. So if you have a small account, okay, I've been asked about this, and let me just add that I'm not giving any financial advice. A lot of what I'm saying is going to be very arbitrary. I'm not telling you to do anything from a financial standpoint. This is all just for educational purposes and for other reasons. Let me just add that if you have a small portfolio, a small portfolio, okay, and let's say you only have like I don't know $2,000 or $10,000. There's this thing known as the pattern day trader rule, and I think you could only do 3 trades a week max. And if you do a fourth one, they can ban your account for about 90 days on most platforms. Even Webull does this. This is just a law here in the USA set by the SEC. They claim it's to help retail investors. You could argue otherwise. So to get around this rule, what I would suggest is opening a cash account. And a cash account forces you to be a lot more disciplined, and that's why I love starting off with these when you have a very small account. Now, if you have a lot of money already and you want to just practice discipline, you could go back to a small account and use a margin account for it, just for like practice or just for like extra disciplinary measures. But always have a plan before you start doing anything. So let's just say you have your like cash account open, you open it with Webull or something else, some other platform like Moomoo or whatever, and then you have, I don't know, $10,000 in there or 2,000 or whatever. It's up to you. Before you jump into any of these charts, first off, you have to enjoy what you're doing. I think it's very important that you at least enjoy it. You have a lot of interest in trading because the odds of you succeeding will go up if you enjoy it. I love trading. I love what I do, and that's part of why I found a lot of success in the process. Secondly, set rules. You have to set rules. What do I mean by that? These rules are going to be intertwined with risk management practices. So if you have like $10,000, okay, let's just say I hypothetically had that much money in just one cash account. Uh, what I would do is, and let me just also add that if you're swing trading, you could use a margin account if you're willing to hold positions for long periods of time. But if you're trying to day trade every single day, make many trades a day, a cash account would be a lot better. Now, a cash account, the way it works is all your funds that are used will not settle. If you buy and sell a stock, they will not settle until the next day. So if you have $1,000 in the account, if you use the entire $1,000 to buy like SPY calls, then you sell all of them, the money is going to be locked until the next day because the funds have to settle. It takes them one trading day to settle if you're using options specifically. For other types of like equities, it could take longer, but for options specifically, it just takes like one trading day. I just wanted to note that. So now you're going to set these rules, okay? I'm not going to tell you every single rule to set. That is up to you because it's your own portfolio and I'm not giving financial advice. But hypothetically, if I had like $10,000 in an account, I would probably think about what I'm trying to do. If I'm trying to day trade and scalp every single day, I would stick to a cash account. And with the cash account, I would set a rule that says I would set a bunch of rules. The first one, I would basically say something like never risk more than like 15% of your entire portfolio per day when it comes to trading. Meaning the max you would want to trade with is like 1,000 to 2,000 max or something like that. That's how much you're going to use maximum. Secondly, I would set a boundary so that if I lose a certain amount of money, I might just stop for the day. If I lose like two or three trades in a row and I lose like, you know, quite a bit of money and like I feel very discouraged or if I feel a little sad, I might just step away to avoid revenge trading. That is a rule you could set for yourself if you're interested. If not, it's up to you. Thirdly, I would try to limit how much I use per trade. So don't try to use like the full $2,000 per trade if you only have $10,000 in the account, because there could be a risk that you could take a massive loss or make a very big mistake by mistake, and then you could end up blowing like 10% or 20% of your entire portfolio in just one day. So what I would do is just hypothetically maybe only risk like three to $400 or even less than that per trade, so you can make just a couple a day. And then if you're using such a small amount per trade, you might ask yourself, okay, this is kind of obnoxious because you want to make a lot of money. A lot of people want to make as much money as fast as possible, and trading typically does not work that way because of risk management practices. And here's something that happens from a psychological standpoint. When you are trading with $10,000, you might try so hard to double your money in one day and make it to $20,000 off like SPY calls. That's awesome. If it happens, congratulations, but be careful with practices like that, because if you become used to doing that every single day, there's a risk. And the risk is you might blow your entire portfolio if you end up making a mistake, especially with those 0 day to expiration options. The theta is going to delay and just kill the value of your premiums pretty quickly if you don't play them right. Okay, so that's why you need to manage risks. You have to be very careful and you have to be well aware of your psychological state. Setting certain rules like the ones I just mentioned are important. And what I like to do is just review the rules every single morning before I start trading. And then I also think it's very possible to imagine yourself by imagine your situation if you plan out every single trade and have a target in mind. So now when you're ready to manage all your risks, you enjoy trading, you love the game, you have all these rules set to manage risks. Whatever you try to do, it's up to you, of course. Then what you're going to do is when you have everything set in mind, you could study the markets and start studying some charts and say, hey, I'm watching the support level. Maybe there's a good opportunity. If support breaks, this could be a shorting opportunity. Maybe I'm going to go long. So you need to determine which direction you want to choose. And you're going to be watching the price action. You're going to be looking at a bunch of different time frames. What you need to do is experiment by looking at different time frames. Typically, not one time frame is going to be perfect. So if you're looking at like the hourly on SPY, notice how there were some days where if you look at the 1 hour time frame, support was holding on the 200 EMA on SPY. But then there were other days where, if you looked at the 30 minutes, you would have seen something a little different. Maybe like some days, the 30-minute 50 EMA held up a lot better. So you want to like look around many of these bigger time frames. You don't just want to look at the 1 minute. You want to look at the 30-minute and the hourly. But specifically, if you only have two screens, just hypothetically, I would right now in the market, I would say the 30-minute is working very well for looking at potential short and long entries using the MACD. This could be very helpful. And I really like to keep my trading simple. I learned that you could be very successful, and some of the best traders I've ever met are just using the most simple indicators ever because they don't want to overcomplicate their trades. And you can be very successful just by looking at divergences and simple indicators. So what you want to do is, it depends on what you're trying to do. If you're swing trading, then it could be very different. But if you're just scalping, using the 30-minute for direction could work very well. And this could change depending on the era, depending on the type of rally we're in. This could always change. But for now, 30-minute would work really well as of right now. This could set the direction. So for example, we got this like bullish crossover back here, right? And the market just continued to pump on the 30 minutes. The 4-hour confirmed this because the 4-hour was looking very bullish. Right here, we got a bullish cross on the 4-hour just a couple of days ago. So that confirmed the bullish trend. The 30-minute confirmed it too. And then for your like entries and exits, you could use either the 3-minute or the 5-minute time frames. And this could be very helpful as well. So I would like look at on this side, I could look at like the 5-minute or the 3 minutes. I would have everything in mind. And you're using all these indicators, okay, all these different time frames to just paint a bigger picture. What do I think the market's going to do? Is SPY going to jump maybe? Excuse me, sorry guys. Is SPY going to jump another like $2? Is SPY about to break this resistance? Once you have the vision in your mind, and once you are looking at your different support and resistance levels, once you're looking for a technical break, for example, on the 5-minute, we held the 50 EMA. This could have been a very good buying opportunity. People could have started buying calls right here just yesterday. Then they would have watched this resistance. They could have considered taking profits here unless we broke it. And as we broke it, they watched this MACD. It's a little hard to see right here. I'm sorry. The MACD was wide open. Hold on to your profits, and then you can start raising your stop loss. And that brings me back to another risk management strategy. I forgot to mention stop losses. You need to use a stop loss to help you out. You can't always use it by setting it manually because sometimes I don't do that. What I do is I just have my finger on like the sell trigger and I'm just watching the chart to watch for my exit area because sometimes trades could be very fast and you don't have time to set the stop loss. So sometimes I do that. That's another strategy that could work very well. And then when you execute the trade, you want to look for your target typically, and you have to plan out your gains. If your stop loss is set to 5 or 10%, you could afford to lose 3 trades in a row to lose 15 to 30%, but on your fourth trade you want to make 40% if you get a very very good move. Maybe even like, 35 to 40%. That's very doable if you catch a very good move and you have the right strategy in mind. So you could lose 3 times and every fourth trade you could be successful and still be a very profitable trader if you learn to manage risks and use your stop losses. On top of that, don't forget about discipline. You have to be very disciplined. I, for example, wake up at 5 in the morning every morning and I'm constantly just studying charts, looking at them, talking to a lot of my friends and other very successful traders. Uh, don't forget to calm your emotions. And what I mean by that is we oftentimes want to catch every single move. Like, remember Nvidia when that thing just blew up? So many people became very emotional. They were sad. I didn't buy calls. I wish I did. I understand the pain. I didn't hold calls on Nvidia because I knew there were some risks involved. But I knew at the same time, if I were to do it, I would just use a small position that I'm willing to lose just to be safe. And sometimes those risks could be worth it. Sometimes they may not be, and it can be very dangerous. That's why you have to manage risks and be very careful. But at the same time, you have to understand that trading can become gambling if you are not managing risks, if you're just playing around with it. And that's the important aspect of understanding that this is not just some kind of video game. This is serious, this is real money, and you have to calm your emotions. Uh, Another thing that's worth noting is you're not going to catch every move, like I said. That's why I keep talking about how there are all these big dates, and I pay attention to the data and all the news and all that beforehand. So, like, for example, let's just say it's like June 12th. If I was trading on June 12th, I would secure most profits. And then if I want to play and hold anything overnight, I would be well aware of CPI for June 13th, for example. So what I would do is I would manage risks by hedging beforehand. That means I would hold a long and short position, and I could simultaneously just like not do that, or just like hold cash instead if I don't want to play it to be safe. Those are just my options. And I'm saying this because that's how you help to manage risks. Sometimes people just keep on holding on to their calls, they become too attached to them. Sometimes they do the same thing with their puts, you know? And the problem is a big event happens, you don't expect something, and boom, you just blew your portfolio. It could happen like crazy. I've blown so many portfolios when I started doing this. It was very tough in the beginning, but as time went on, by managing risks, I learned a lot more and I improved big time. Journaling your trades is going to be very helpful. Write down what trades you entered, why you entered them, and keep a note of them. When you fail, okay, if you have a strategy, like, such as like if you fail 3 or 4 trades in a row, you just stop trading for the day and you just take a breather. That could help you with your emotions and to help calm your emotions. But then if that happens, journal everything and then review your failures. Review everything, review everything on the spot. Talk about what did I do wrong? Maybe do it the night after, the night before, or whatever. Review your failures, understand why you made that mistake, and try to learn from it. And simultaneously, be very careful. Now, don't forget you have to study your charts and your TA2. That is a big part of trading. You can't just look at the news solely. You have to look at macros, fundamentals for companies, and everything together. All of those are very, very important. Some people just look at the charts. Yes, you can succeed in doing that, looking at charts and order flow. But I would say it's also very important to be well aware of the news that comes out, such as like the debt ceiling news at one point, and then CPI, FOMC. That's why I have this channel. And finally, don't forget to rest. Take breaks. The market can be very, very emotional and relentless and dangerous. So it's very important to take breaks when you need to take them. All right. So, anyways, I kind of rushed through this. I just thought of these from the top of my head. And I just thought of all of these in just a couple of minutes from my own experience. And I think this would be very helpful for you guys. I'm sure this video was not completely sufficient to make you successful at trading, but trading is like a skill. Okay, it's like a skill. You have to remember it's a skill, and the market's going to do its thing. We are simply just players on the side who are entering and exiting little positions. Even if you're a millionaire, you're not going to be moving the S&P 500 like crazy. You're simply a small fish in a giant ocean full of billionaires and trillion-dollar institutions. I know you don't want to admit that. You're still very special, of course. I know that, but it's the truth. It's the truth. We're small fish in a giant ocean. And that's why you can't be too attached to certain positions and you have to learn to manage your emotions. Trading is just a war with your own self. There are many times where people revenge trade. They try to make all their money back, but you have to learn to manage it all because small wins trump losses. And if you could consistently make small wins, eventually you could exponentially grow your portfolios. It can happen, but I would rather grow a portfolio slowly and consistently than to just take a big win and a big loss over and over and over again to grow. That's the importance of managing risks. I also have another strategy that I'm using, and basically, on the days when the market's very choppy, I tend to not trade as much. This is what a lot of pro traders do. They don't trade as much because there's not as much volatility. And on those very tight days, those are like the opportunities to wait or just look for some other play, like something else like Meta or Tesla, Nvidia, or something else, and then wait for that moment when the big move is ready. Because when the market's very tight, typically a big move is coming. That's your opportunity, but it requires lots of patience. This is a game of patience as well. A lot of people become very impatient. When I used to trade, a while back, I used to rush in with all my money. Let's make, $1,000 today, $10,000 today. I would rush in the first 30 minutes, 40 minutes, first like hour, and then sometimes it would work out, sometimes it wouldn't, right? And that's why you have to be patient. Take these deep breaths, be very patient, enter, exit quickly, review your trade. If you did well, look for another opportunity. The number one saying I heard when it comes to timing your entries is hunt, do not chase. Hunt for the opportunity before it comes. Hunt for setups. Keep them in the back of your mind and then trade very, very conscientiously. It really is difficult. It is very difficult. But with perseverance, with dedication, just like any sport, from hockey to soccer to football to the NBA, basketball, whatever, just like these sports, you can learn, you can gain skills, you can gain patience, and you can never, ever let your emotions get the best of you when making insanely pivotal decisions. Sometimes it can happen, and it's okay because we are emotional creatures. But to make optimal decisions, typically you have to set your emotions aside and do what's rational. And that's why you have to set these rules and that's why you have to manage these risks. So hopefully this is helpful for some people who have smaller portfolios with only like 10,000 or like $2,000 or something like that. Hopefully this was helpful for you. Uh, these are just some rules I set from the back of my mind. I just came up with them, which is pretty funny. But I really hope this helped you guys in some ways. I mean, I personally know some very, very strong traders, and I've been learning from them for a very long time, for quite a while, and I would love to share as much knowledge with you guys as I can, and I would love to provide it for free, not charging anything for courses and stuff like that. That's why I'm here. I want to help you guys out, and I hope the best for everyone. Okay? Thank you all for listening. Have an absolutely spectacular weekend. Remain calm, cool, and collected, and I'll see you guys in the next one. The market to the moon. The long term is very bright. Your futures are still very bright. No matter how old you are, no matter how much you've suffered, you can succeed. You just cannot give up, and you must learn from your mistakes. Success cannot be forced upon anyone, but it can be learned through dedication, through hard work, and by learning from your mistakes. Okay? Thank you. Have a great day, everyone. And I'll see you guys in the next one tomorrow. Thank you and peace out.